All right, Betty, we live at 1:59. Let's go. Let's get straight to it. So I made this video because I was already doing my thing with the charts from the get-go. I actually had a long few weeks, few days, whatever you want to call it. Can't pull them back up. And I ain't worried about him. I'm gonna do my call anyway. So let me show what I've been doing the first time, which is this is what I was going over. WYKOFF Schematic. Okay, so boom. This is what I was going over. For those that don't know, this is WYKOFF Schematic. WYKOFF is basically, we all understand like trade with the trend. Well, this is where the trend pretty much comes from. Speaking from an advanced, this is an advanced type of medium, type of video. If you haven't ran into WYKOFF in Forex, you will run into it soon. Like somehow, some way, you're gonna run into it. And yeah, I go to the wrong page. Hold on, I'll be tripping. Hold on. Share my screen. Is this it? Yeah, this is it. Okay, so this is exactly what WYKOFF is. Everybody knows, well, if you don't know, the banks move the market pretty much. And the banks, a lot of people with like a heavy volume amount of money. I'm not talking about no $100, $200 accounts. I'm talking about like big, like $100,000, $1 million, $1 billion, $1 trillion accounts. Like I'm talking about trading like $1 million. Like, you know, somebody, my own amateur trader might see like a position that's open for like $300, $20, or something like that. They positions be open for like thousands and millions and billions of dollars. Like that's how they normally trade. So we're saying that this is the idea of how they pretty much trade. They start off in the accumulation area, meaning that this right here at the bottom, this will probably be like a buy scenario. So you'll see a couple of buys, you'll see some buys, you may see some high buys, some low buys. You might see the trend start like going sideways, consolidating. But what that's pretty much saying is that they're finna get ready to push price up. They have to consolidate for a long time to build up orders, to build up their structure, and then eventually they're gonna take it up. And then when they get up here to the distribution area where price is overbought, where things seem too high, this applies in stocks and Forex. So when things are overbought, when they're overpriced, then eventually they're going to keep getting orders. They're going to keep distributing orders. When I mean distribute, is they're distributing orders to the public, being me, you, retail traders, whoever, to take these positions. Considerably buy positions, because thinking of it as an actual, how should I say, as an actual like person mind state. Like if you're a new person in the market, when stocks get low, especially like if you're brand new, you don't want to mess with the stocks. It's like kind of cheap. Everybody wants to buy. They want to start buying stocks when they see that everyone else is already buying. So when prices, like let's say it's Apple. If Apple is worth like $50, nobody's going to really buy. They're not going to buy until Apple shoots up over $100. Now you got all of these people saying, oh, stocks are doing good. Let's go ahead and buy. Forex is doing good. Let's go ahead and buy. So you got a lot of people right here buying. And after a lot of people have bought, they're going to bring price down. So on the mind state, like on the emotion, all of this is like dealing with emotion. But let me cut the camera on. Y'all can see me. All right. So all of this is dealing with emotion. Like you're gonna go down, you're gonna come back up, you're gonna go down. And you can repeat the process over and over and over again. On an emotional standpoint, you got a lot of new traders. They're trying to like sell low because their stock has like gone down in price. They're losing money, so they want to sell. And then when it comes up here, a lot of new retail traders, they want to buy because everything looks so good right now. While from the bank standpoint, from the advanced standpoint, they want to buy down here. because prices are cheaper. In a retail's mind, prices are doing bad because the price went down. But in an advanced standpoint, prices are actually cheaper to buy. You wouldn't buy. I mean, me personally, like I like buying shoes. I used to like buying shoes. I ain't bought some shoes in a minute. But when I was buying shoes, there is no way in hell that I'm gonna buy these shoes for $225. No sir, Bob. I'm not even gonna lie to you. I'm gonna wait until like price gets lower. And that's exactly what this is. Like this up here is the brand new Jordans that just came out for $250, and everybody's standing in line. They want to do whatever to get these shoes. Me, or as I should say, we're not going to buy right then and there. We're going to wait until the price comes down, then we'll take our buys. Now a lot of people that, you know, like I'm just using shoes as an example. Some people, especially if they're not like really like thinking of it as a money standpoint, once the value of those shoes go down, then they want to, you know, get them shoes off of them with up. So they decide to sell. This is the same thing. So I said that to say, because I can't really show it on the chart. Well, I'm not going to show it on the chart right now, but I'm going to get to that in a minute. Go down, go down. This is what I was looking at, the schematic. I went over this like a couple of times before. I wrote my notes down on it and everything, but I never actually took the time out to learn. Like I wrote, like it's a difference between just writing stuff down and actually like taking the time out to learn. I never actually like sat and like soaked it all in, because I understand the schematic. I understand how it's supposed to move, but I can't see it like I can't see it in just chart mode. So you head down. You get your huh?
You leave a number?
For Steve?
Yeah.
I got hit. Oh, he said don't worry about it. I already got it. But it's all good. So this PS, I can't remember what everything like really stand for. Actually, the terms like down here at the bottom. So, but I'm just giving like a quick rundown anyways. You got your PS. This is like phase one. You'll bounce up. You'll come down to a climax. Basically, this climax is saying that the downtrend is over. So you have a pause right here. You come up. You got all the way big drop. Once you see that big drop and it's not going past it anymore, 9 times out of 10, that's your secondary climax. You get an automatic rally, and then you come back down for a secondary test. That's all phase one. And that's actually easy to see. Like once I see this, then I pretty much got it. Then you got phase B. Now, these moves, they usually happen, they can happen on any time frame. But if you see it on the time frame, I'll show like how easy like you can capitalize off. Capitalize off of it. Then you got this big move up. You got this semi downtrend going down. Especially if you see this on the daily, then this would be like a big like downtrend. And then you start seeing it make its way up. When it finally poked up, it poked through this automatic rally. And then we came back down. We worked our way down. A lot of people saw it come right here. You see the double bottom. A lot of people saw it come right here, especially when I already said it wasn't going to come past this low. So a lot of people would be trying to buy. They would be trying to buy, and then boom, everybody gets stopped out. This is a spring. A spring it's to shake out the traders. It's to like fake out the traders that's buying right here, and also to make a lot of people want to sell, because a lot of people see this whole downtrend right here, and they want to sell that. So a lot of people are selling in this area, and they get stopped out. A lot of people that are trying to buy right here, they get stopped out. So it's a big spring. I actually seen this like a couple of times, to where like you'll probably see like a very aggressive doji close out. That's faking out all of these sellers and faking out these buyers. So after the spring is done, you'll come back into the range. You'll probably come back down one more time for a test, just to pretty much see if there's anybody else still buying and still selling, because you probably got a couple of people that probably bought right here, faked out. Probably a couple of people that sold right here, faked out. And then basically in the C phase, you see we go up, down, up, down, up, down all the way until we poke out. This is how I know we're in phase D for sure, because you'll get that poke out. That poke out tell me that we're starting to leave this range. We're starting to leave the range. This is a sign of strength. Now, when you come back one more time, you'll come back into the trading range that you just left from. This whole area, I wish I could mark it off, but this whole area from PS, you see how this PS line goes all the way through? And then this secondary, I'm sorry, the selling climax goes all the way through. Usually somewhere within this area between the automatic rally stop and the preliminary support. Let me make sure. Preliminary support, yeah. Preliminary support and automatic rally, you'll probably get like a throwback. This is the throwback, because it's basically saying like we went up out the range. We're finna get ready to leave. But before we leave, we need to take one more test just to see if we can, actually move out. Then we get up, move down, then a big up move, and that starts to mark up. You're flying up to the top. And then you'll probably get a couple of reaccumulation phases, which is just small versions of accumulation. And you keep reaccumulating up, you keep reaccumulating up until you see a change of character. Or I wouldn't say a change of character. I would actually say like a change of trend. Let me go down. So when I say change of trend, this is what I mean. Because I just went over accumulation. This is distribution. This is the same thing. It's not even the same thing. I'm not even going to say it's the same thing. Because I know I am making this kind of like beginner friendly, even though it's not beginner friendly. It's more advanced stuff. But I have to be clear on what I say with this whole thing, because WYKOFF it might look simple on this chart, but I'm not going to lie, like it's going to take a lot to learn. So this is preliminary supply. You see, like on the first one, it was just preliminary support. So you go up, you stop. Now you got a buying climax. You just had a selling climax. Oh yeah, it is thunderstorming. Anyway, buying climax. Then we turn around, automatic reaction, secondary set. So you kind of see that it's kind of the same thing that we just looked at, but in reverse. Up thrust, we went up a little bit. We came back down within the trading range. Then we have an up thrust after distribution. So this is like an upward spring. This was an up move. A lot of people was buying. A lot of people were still buying, or they were getting ready to sell. Got the sell down here. Then we came back up, take out those sellers. We tested just to see if there's anything left in here. Boom, 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 boom. Downtrend. Come back up. Last point of supply. We come back down. Sign of weakness. We had a sign of strength on accumulation. This is a sign of weakness. Sign of weakness is basically saying like price is starting to like get weaker and weaker, basically. Then we come back up, come down, come back up, come down. Now, mind you, even though we came back into the range on this one, you see we're coming down, but we have one more little push up. And it might not always come back into the area, but you always see that little push up real quick. And then that push down. So that's pretty much, I'm just going to keep it like pretty simple like that. Like you got accumulation, you got distribution. Let me stop this. Let me take it back to me. All right, so now we're here. Let me go down to CAD JPY because I know I saw it on this one, and this was actually why I pretty much got in this trade. Oh, man. Okay, it's all good. It's all good. I did this trade on the computer, but it didn't update on here. It's all. Oh, let me just refresh it. I'm gonna get the boys in a minute. I'm sad. It still didn't change. Oh well. I'm not even gonna worry about it. I'm gonna just keep going with the flow. I can erase this, and I can erase this. Now, what I mean that I saw it already on this one. Hopefully, this is accumulation. I know we're in the downtrend right now. We might be in the uptrend on the 1 hour, but if we go out to like the 4 hour, then you'll probably see like we're actually in the downtrend. You got this high up here, and then you started making your way down, all the way to like down here. And then this whole little move backwards, this whole little move going back up, that's just the current uptrend. But I'm taking that uptrend just a little bit higher. Nothing too fancy, nothing too crazy. But with this particular trend, just by looking at where we are now, I pretty much seen the same thing. I'm going to show you 15 minutes. Okay. So I'm actually going to draw this whole box out. This whole box being right here. This is my accumulation phase. I'm going to show you, well, I can't even show, but hopefully you remember from the actual picture that I just shown, this is what accumulation like looks at. And I like it because like I seen it like very, very clear, and because I was already looking for a buy on this pair. Hold on, let me fix up. All right, babe. So I'm gonna draw out the ray. Green, thin line. So this would be the PS. This would be the preliminary support. And then you come all the way down to the bottom. This is the bottom. This is your selling climax. Right? Right. This would be my automatic reaction. And let's just pause real quick. Because remember, we had phases. This being phase A. All of this being phase B. This being phase C. And I didn't get that immediate pushes yet. But it's almost headed for phase D. And I can just tell just by like what's going on now. So I can't really, no, I can. I can and I will. I'm gonna show it. So this being PS, I'm gonna actually mark these points off with my exclamation mark. So this is the PS, because you see how we came down so aggressive and then we stopped right here. And you know we stopped because this is on the 15 minute. You see the candle saying that we're not going down anymore. And then we turned around real quick, and then we kept going back down all the way until we finally stopped. So this would be the SC. This would be the selling climax. We're making our way up. We come up here, come down a little bit. We came all the way up here. That's the secondary. Well, I'm sorry, automatic rally. I had a long night and I didn't get no sleep. And then we come down here again. This is, for me, this is the secondary test. Secondary test. You got that up thrust. This will be the up thrust because it quickly poked its head out the area. So that's the up thrust. Then we started slowly making our way down. A lot of people was trying to buy. We didn't get the exact spring, which kind of like still like bothers me in my head, but for the most part, like no FOMO. I just took the trade, just, you know, no FOMO. This would be the spring or the test in my eyes. And then we started making our way up. Somewhere right here. They poked out right here again. But this is a sign of strength. It's a sign of strength because, I mean, it's obvious, like this high is higher than this high. and this was a very like significant high. So what I'm expecting right now is pretty much like exactly what's going on. Like it's coming back into this area. This would be the BU or the throwback. And then we should start to work our way up here. Probably come down a little bit. You've seen the consolidation. We'll consolidate for a little minute. And then we'll actually finally get that run up. So that's what I'm expecting for CAD JPY. Now, I'm going to go back to the schematic real quick. And I'm going to go up, up, up. Scroll down. No, scroll down. Me personally, let me look at it again real quick. Me personally, I mean, they look the exact same. Like, these are pretty much like the exact same thing. I don't know why I'm showing like this. Hold on. I need to get better with this screen sharing stuff. Nope. Okay, so now I know for sure that you can see the schematic on here, and then you double back, and you see it on here. On here. On here. On here. It looked the same. It looked the exact same. If it's not the same, then don't worry, because you see this is schematic number one. If you scroll down, you have another schematic, because they don't move exactly perfect. They're not going to move like exactly how they want to. But you get the idea of how like they pretty much like it's the same thing. It's just like within this area. Like once I see this preliminary support, and then we come down to a climax, and then we get a reaction, then I can see it. But it's like if I don't see A and I'm only seeing like B and C, then it's like I don't really know. But for the most part, this was a good example. And plus, I'm actually currently in this trade right now. I took a buy on it not too long ago, and my stop loss is down here. So if we come down and hit my stop loss, then I'm not tripping. It is what it is, because I understand that if it hits my stop loss, then it's gonna like eventually like keep going back up. If it don't, then it is what it is. I'm not gonna like force no trades. Just let it be what it be. Let me go to EU, because I found it on EU and it's very clean. All right, so let's go back in time. Go back in time. Keep going. All right, boom. See, like I can find it when we back testing, but I cannot find it like live in the charts. All right, so we can see it. I'm actually gonna make it a wide range. I don't think it's way out here. Yeah, it's not way out here. It's actually a little bit lower. You see where we had an aggressive halt? Like we didn't have a stop to where like we wicked down a couple of times and then we turned around. No, we had a close, like an immediate close, and then we started turning around. I can you see me? But let everybody know what's going on. Ooh. But, all right, so come down. This is preliminary support. Draw the line off right here. Then you see we came up. We ran up for a little bit. And then, boom, we smashed down real quick. We smashed down right here, right? This is where we stopped. We had that automatic rally. And then you see we came down here. This is a much better example of secondary test, because if I go back here, you see the secondary test came a little bit lower than the selling climax. And like I just said earlier, it doesn't have to be perfect, but just understanding like I don't understand WYKOFF too much myself, but I understand it to know that if we're going from this preliminary support, the next objective should be secondary climax. And after that, your next objective should be automatic rally. So understanding that, like, you can go on a small time frame. Once you hit this like bottom, like once you hit that strong bottom, then you know you should have an automatic rally right after that. So you're going from a strong sell to a quick buy, and then so on and so forth. It's gonna be hard to tell, but like for the most part, like if you can like identify it clearly, then you should be good. So we go back here. This bottom line is my secondary test. No, this bottom line right here, yes, is the secondary test. Mark that out for that. So I'm gonna get a brush. Speaking of a brush, need to do something about that. So we got this big aggressive drive. We came down here. Curve came down here. Then we got an up thrust. Then we got a secondary clock. Then we got a test. Automatic rally, then a test. Then we came up again. You see, we was working our way up. We consolidated, but we consolidated our way up. If I go over here, you see we came down aggressively. This is the test, and sometimes it'll give a second test, but sometimes it doesn't always have to. Like really go like break this down. Like you probably gonna have to watch another video on this just to like really get it. So anyway, like you seen, we had like some slow move down. We had a smooth move up. I'm sorry, this is the wrong one. Smooth move up. Yeah, there we go. Strong move down, smooth move up, smooth move back down. Strong move down, smooth move up. What we got now? We got a smooth move back down. And just right here with this blue candle, with this very long wick, that's a clue. Because you can see that that whole wick went lower than these lows in the secondary test. So that's how I know it's a for sure spring. And this wasn't like a long time ago. This was April 20th. So like they're like really like, you know, you can catch these. You got that spring, and then you got that test. These wicks would be considered the test. But you see how the test like played out. It kept dipping to the area for a little while. And then we finally started seeing the run up. We got this very aggressive run up. Now, mind you, that after we got that run up, we had to come back to test the area one more time, which would be right here. Doop. And then we continued to move up. Even though that move up might not seem like exactly what you might think, because when I first saw it, I felt like, okay, like when we get this run up, then we should like take off to the moon. And sometimes you should, but for the most part, it won't like exactly be like that. Because when this move finally did take off from here specifically, or like from here, we went up about 60 pips in total for that whole move. You did all of that to get 60 pips? Yes, you did. Like, yes, you did, buddy. Now, look, it's not, like I said, it's not always going to be perfect, because you see that this line actually came, like, almost, like, directly into the trading range. And then it halted for a long, long time. It paused for a long time, and then we got to run up. And then after that, what we got? We got another run up. We did get a strong move down real quick, testing the trade range again. Like the schematic on stocks, it's clear because you understand like stocks will always keep going up. But when it comes to like foreign exchange pairs, you have to go back and forth between down and up, down and up, down and up. So like if you see the schematic playing out real quick, then you just need to take whatever play you get and you just need to leave with it. For distribution, I can't really call out distribution myself, because it's kind of, like I said, it's kind of hard for me to see. I can see accumulation real easy, but when it comes to distribution, it's like my brain is just like, I don't know, it's just like lose thought or something like that. That's not too clear. Not too clear. Now, let me go to GU. GU got a little bit of that action too. find a clear one for the game. Okay, this is somewhat pretty clear to me. This would actually be redistribution. We see when we're going down this whole time, when we're going down. Draw out the downtrend, we've been heading south. And my area, come on. This computer been giving me problems lately. Rectangle, I'm gonna draw out this specific area. I don't care about that. And I'm actually gonna dip down to the 15-minute so it can be more clear. So let me go back. Now this one again, like you see it ran down, and as soon as it ran down, it ran right back up. But the run down is what really matters. I guess if you're trying to trade Wyckoff on a perspective, like it would be best for you to get in somewhere in that phase C. But you have to be understanding where that phase C is, where it's gonna come, and how long it's gonna stay for. You see the PS. The PS being right here, because you see that big up move, you see it going up, you see we had an aggressive move down that pretty much just said stop. Boom, I'm marking that off. And then we came up here to where we bounced a couple of times, and we did that buying climax. And then you see we came for a run down, automatic reaction. Boom, right here. Now you got your up thrust, which is right here. Let me go back to this so I can show, because it's gonna be the same, but it's not always gonna be clearly the same. This. So that's why I just marked off PSY. You got your buying climax, you got the automatic reaction that comes down, secondary test, maybe a sign of weakness, and then you got your up thrust. So we came up, PS, buying climax, came down right here. This would be the secondary test. It doesn't always have to be perfect, but you understand that we came down a little bit just to test it real quick. And then we came back up for up thrust. So that up thrust would be right here. And then you see after the up thrust, we came back into the trading range. And then we had another up thrust, which was bigger. We came back into the trading range. And then we had another up thrust, and it was bigger. It's crazy. Like, you cannot make this up. You see it clear as day on the charts. All you have to do is just train your eyes to see it. But anyway, like you got that up thrust, and then we came back to the range. You got that big up thrust again. This being phase C. Oh, it's raining. This being phase C. So, like I just said earlier, like you can if you know that you're waiting for that up thrust after distribution, you got your up thrust right here. You should understand that you're waiting for your up thrust after distribution. Once it comes up here, then you, as an advanced, special trader or Wyckofian, whatever you want to call it, like you should know that you're getting ready for a sale. Me personally, how I would have did it, if I would have saw it at this time. No, go back. If I would have saw it at this time, I would have had some points marked off right here at the top. And I'm going to make this a blue, make it dotted. So I understand that if I'm in the up thrust and I want a healthy distribution phase, then we should come up here, especially like if you know, like these are equal highs. So those equal highs, it came up, ran those equal highs, and then like respecting the sale. Me personally, like maybe I don't think I would have had a sell limit right here. I would have had mine just a little bit above, maybe like somewhere like right here, something like that. And then like, take the trade. Like the stop loss, just to be safe, it probably would have been like a 25 pip stop loss, which being right there. where we're taking it to. I mean, we'll have to actually look at structure to understand where we're taking it to. But me, like, just going off of this Wyckoff perspective, I have to understand that we're going to get a run off from this whole phase. So, like, if we started right here with the PS, then, like, first take profit would be at the PS for 44 pips. And then look at it from a structure standpoint. Look at it just based off of structure. These are nice areas down here. Let me go to the 1 hour where I actually trade from, because this is how I'm going to be setting up my Wyckoff trades once I start taking them. On the 1 hour for me, I see all the structure down here, because you see big bearish candle, then you see a bullish candle to follow it, bearish candle to follow it, bullish candle to follow it. Like, that's like a mini accumulation phase. So me, I would have had my take profit like down here, something like that. So that's about 62 pips. Like, that's a basic trade, like 25 pips for 67. But you got in this trade because you understand what Wyckoff phase you're in. That being phase C. Now afterwards, you get that runoff. Come on. All right, so now you get that runoff. So yeah, you see after phase C, after it made that spring, then you went back into the trading range. Phase C, you got that spring up here, up towards after distribution, came back into the trading range. Last point of supply. Last point of supply. You had a quick pullback within the trading range. You exited the trading range and you pull back in. For here, you pull back into the trading range. You had a pullback within the trading range. You pull back out. Like, that's it. Like, that's really it. Me personally, like, I wouldn't even try to sell after you leave the trading range, because, like, you don't know. You might get that throwback in, but you see for GU, you didn't get that throwback in. Of course, like, you came back over time, but that's way over time. Like, by the time this move already happened, trade would have been done. But a smart way to really do it, if you want to capitalize, like, every day I get on these charts, I just get better. It's crazy. So my original sale would have been right here. 25 pip stop loss, right? 25 pip stop loss. Take it down here. Say that's 70. And then that would have been trade idea 1. Trade idea 2 would have been a sell stop right outside of the area. I understand this is preliminary support. I mean, preliminary supply. So a little bit beyond that, preferably right here. If you know, you know, 15-minute order block. I would have my sell stop like right here. And this trade would have been careful. I know it's hard to see. I'm just plotting this just to understand what would have happened. And then my take profit would have been the same. I'm actually gonna make another video real quick to go over sell stops and buy stops. But yeah, so that's how Wyckoff like pretty much works. Like, if you can see it on the chart clear as day, then like it's definitely gonna work out. But it's like every time I get to a chart, when I look at it, it's like, I don't see it anymore. This one, I can see it now. And this was very recent. If you know, you know. PS, SC, automatic reaction, secondary test, up thrust, slowly came down, spring, came up a little bit, retested that spring, and then you know you're finna start going up. You poked up right here. You see you poked out the area. Then you had a throwback. That throwback, for me, that throwback's my entry. Somebody could take that entry. This type of trade probably would have been like right here, something like that. Nice, cool little stop loss, and then just take it up. The idea with WYKOFF is just like any other like trading cycle. Like, you know what you're looking for. If you trade break and recess, whatever, like, you know what you're looking for. So that's why these should work. So yeah, that's pretty much it, honestly, because I just had to make a video real quick about WYKOFF because this is something I need to study myself. See all the you see all the tabs above. Like, I really need to like get to studying this myself. So yeah, that's pretty much it. Damn, I know that was a good video. This one definitely getting posted on the YouTube within. So go check that out within. And I am out of thin. I'm gonna be right back again at thin though, because I'm gonna make another video again at thin though. So yeah, at thin though.